Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Good morning, everybody, and welcome to the Wednesday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had an amazing trading day yesterday, as we have continued our march up, but that march could be coming to some challenges. So let's go ahead and take a look at what some of those challenges may be. If you're new to the channel, do me a favor, click that subscribe button down below so that you get the updates as they happen and as they become available. So let's go ahead and dive right in. S&P this morning, we're up about 6.5 points. A 0.25% early this morning, not a whole lot. But we do have a level up above us that we are starting to come to. Now, yesterday I talked about a potential breakout above this 2568 level, and we hit it early in the day, pulled back, and then rallied up to it. So it was one of those breakouts where we actually hit the breakout and then didn't really do a whole lot. One of the things that if you're a Traders Army member, I put in the private trade feed about taking some money off the table pretty early in this one because we saw that the momentum had been waning, and then it did come back and break out a second time. But one of the things I notice about what's happening right now is if I just throw a quick momentum indicator on here, you'll see that while I definitely still have higher swing highs or higher swing lows, my swing highs are getting a bit closer together, right? My swing highs are getting a bit closer together, and my momentum is definitely waning. So with that momentum waning, it's gonna really kind of show me, I need to pay attention to what is the resistance that's up above me, right? What is the resistance that's up above me? And when I'm in a 1 hour time period, I do have a level up here. Now, this level has already almost been tested once, and we're coming into it. Now, we're not coming into it with a tremendous amount of momentum, right? Our momentum coming into it has been kind of slowed a little bit. However, we are indeed still coming into that region. And on the 4 hour chart, that doesn't really show up quite as cleanly. I've got some cleaner areas right in here on the 4 hour time period, but definitely some weakness is being built up. It doesn't have quite the same oomph that it had before on this rally higher. So, and it's not just the S&P that we're coming into some serious some serious resistance. There's a lot of stocks that are coming into some pretty strong resistance as well, and so that's obviously what's going to drive the S&P if it hits some of that resistance. So that being said, I'm not necessarily looking to short it until something tells me to do so. And right now, I don't really have that, right? I don't really have that, and this is kind of the I'll call it the waning period, where there's a lot of different places that the market could go. I say a lot. It can go up or it can go down, but it can go down. And it can go down until it comes to a decent retracement point, which right now on an hourly chart, we've got this little level right here, which I had not marked yesterday. We've got this little level right here. But on a 4 hour, that level doesn't really show up, as clearly, right? But it was an area of resistance here. Old resistance oftentimes act as new support. So now we're between a couple of decent levels. What I am going to do is I'm going to take the 1 hour that's up above us, and I'm going to convert that to a confirmation style entry. And the reason I'm going to convert it to a confirmation style entry is because I don't really love the way that we're approaching this area. We're basing in front of the level, and basing in front of the level turns things to confirmation style entries. This could become, a breakout where we break out of here into this level, and then we get the reversal. So either one of those are potentials. This level down below, this 2534 by 2525, on a 1 hour chart, not quite as clean, not quite as clean of a level. On a 4 hour, it actually looks significantly better than it does on the 1 hour, and that would be a decent little pullback for then price to continue to rally higher. So we're between these areas of demand down below us and overhead supply up above us. But our supply levels that are there, we still do need to kind of keep in mind and pay attention to. Now, this rally that we've gotten here has been a very strong rally off of this bottom. I was originally thinking, that it was shaping up a lot like November was, and I was wondering, okay, are we gonna come back down and retest those lows? We've gone up significantly higher than we did in that early November rally. And so I'm getting a lot better on the daily chart. We don't have a higher swing. I've got a higher swing low and a higher swing high in this daily chart. If we were to reverse right here, then it is pretty much off to the races, and it can blow through. Remember, if our daily chart and our 4-hour chart now starts giving me lower swing highs and higher swing lows and higher swing highs, now all these levels of supply above that are found on the smaller time period aren't going to be as respected. Remember that when we look at, you think about impulse moves and corrective moves. An impulse move, let me just kind of draw this out here real quick. An impulse move is the move in the predominant trend direction. Well, if our daily chart has impulse moves that are going up, if our daily chart has impulse moves that are going up, impulse move, impulse move, impulse move, and it has corrective moves that are the ones that are coming down, right? Corrective moves are the ones in this case that are coming down. Corrective, corrective, corrective move. The thing about impulse moves is they will blow through any demand, any opposing levels on the smaller time period. So if I'm looking at, let's say here that we're looking at a daily chart. Well, if I'm looking at a daily chart, then this daily chart is going to blow through any supply levels that were formed on the 15-minute or the hourly chart, and it will search out daily supply levels if that impulsive move is to the upside. The corrective moves, however, may still respect hourly and 15-minute levels. So, we have technically I have higher swing lows, right? If I look at this, this area here, I have a clear swing low and a clear swing low, and then my swing highs. Technically, this is a swing high, and I don't really have a higher swing high yet on the daily chart. I'm not technically quite there yet. I did get higher than this candle's high, which means by definition I have to be getting a higher swing high. I just don't have it yet. Well, a very nice one would be a pullback to here, right? That would give me my higher swing high and my higher swing low to allow price to continue to run higher. So over the next couple of days, I think we may get some decent little pullback. The other thing that I do notice is that we're not quite closing on the highs. In all of these days, we've not really been closing on the highs. We've been selling off just a little bit here and not quite closing on the highs. So there's a little profit taking there coming in at the end of each of these days. If we started to see a bigger wick into one of these levels, and then that may be what feeds that pullback. So I know that's a lot of analysis for one market, but I think it's good to take a look at it from that bigger picture perspective of, is our impulse move changed on that bigger chart, right? That daily chart to tell us, okay, let's look for smaller time periods for reversals on the demand side, but some of the supply ones may get blown through. So just keep that in mind, looking at those supply levels above us in this current time period. In the NASDAQ, we are definitely, we hit this level up here. I didn't feel like this was a super strong level of supply, and we've kind of hit it and kind of moved through it a little bit. So now that's that level that we have in the NASDAQ. If you notice, kind of when this was formed and when it was created, this was the origin of that strong move down. In the S&P, it's this level right here, right? So our confirmation level that I just put in is just above that. And on the NASDAQ, that would be this area right up in here. So the NASDAQ and the S&P don't line up with quality levels, which is another reason why it's moved to confirmation on the S&P. Crude oil. So crude oil is continuing its move higher. We had taken a look yesterday at this area right up in here for a potential reversal. We got a little bit of a reversal off of the level, but then it just kind of popped right through in the overnight sessions. It's not really, depending on how tight you set your stop, it may not be completely over yet. But this level is getting fairly weak up in here. I thought this was a decent little spot for a reversal, but it's getting fairly weak. When I look at the momentum, what we see in our momentum in crude oil is that I still do have higher highs on my momentum indicators. We've pulled back just a smidge in our momentum indicator with this new high, but there is still momentum that is present. So I'm going to let me get rid of these studies here. So I'm going to leave this one alone at the moment. The supply level there just didn't necessarily come to fruition and hold out very well. I will take a look below in this demand area right down in here to see if we get a pullback into this region. This was that breakout above this prior resistance, and a pullback into here could be a decent little turning point trade. In gold. So in gold, I thought yesterday we may get a little bit of a move below this 1282.60. We've actually got we did a touch below and then popped back up through. Now technically, if you look at a breakout short, your stop would have to be above here, right? Because when we look at breakdowns or breakouts, our stops go below the prior pivot, right? This is the pivot is up here. And so it hasn't, it's still kind of breaking down. If you miss the first breakdown, it looks like you're getting another bite at the apple, but now your stop would be above here because this would be the prior pivot if you take the breakdown below this area. So still fairly far away. But I think that it still could work out to be a decent trade. If you look at this on the 4-hour chart, on the 4-hour, you're getting lower swing highs here, and it's putting in kind of this pattern right through here. And if we anticipate that the market's going to continue to rally higher, then it stands to reason that we may see a bit of weakness in gold. In bonds, let me know in the comment section down below if any of you took the short we talked about yesterday in the bond market. So yesterday in the bond market, we had talked about shorting below this level here, and we did get a decent little pullback from that area. We're coming back to our potential reversal demand area right through here. Next is the Aussie. So in the Aussie dollar, and somebody asked me one day, they said, how come you say Aussie instead of the Aussie dollar? Because I was teaching a class in Australia, and the Australians were kind of offended that I said Aussie. I kept saying, oh, look, it's the Aussie. They didn't like that. It's the Aussie. So that's somebody asked me yesterday, why do you say that? That's why. So here we have a little bit of a call it supply area, but we didn't have this marked off yesterday because I didn't feel like it was a great level, especially since we started kind of going meh up into it, and we've come into it and really done not a whole lot. Now, once again, this is another picture of our upward momentum waning just a smidge, but not enough for me to really take a short against, and I still have a level way up here. So for now, I'm not going to really add anything to this position. I'm going to leave this kind of as is. I think if we do, start to break down, there's plenty of ability for price to run down to this region. So if you're more aggressive, I'd be okay shorting so long as you keep a tight stop, maybe below this 71.44. If you're more aggressive, it's definitely a more aggressive entry. You're kind of going counter the big picture, but there's room to run, I think, down to 70.61. In the euro continues this 4-hour charts, this 4-hour of chart madness. And so when I've got that 4-hour madness in there, I don't really want to trade against that. I'm going to let that thing be for just a little bit. I'm going to hold off on really doing anything against this because I've got that 4-hour time period of price going sideways, which is why we're seeing all this. I mean, look at all the wicks. The wicks are, when I see that many wicks, it's telling. All right, it's telling to me that there is some imbalance there that I need to respect. But it also tells me there's some indecision in almost every candlestick, and so I'm going to stay away. Canadian dollar. We did pop higher in the Canadian dollar above our breakout that I talked about yesterday. So if you took that Canadian dollar breakout, then you're doing pretty well, and it's continuing its move higher. We've had a little bit of a pullback in the overnight hours to what could be considered a small area here, and a chance to buy on a reversal. So I think this has another leg higher in it if you are looking at this one for price to continue to move higher. We've got a little bit of a pullback. You can get high above the existing high because there's room to run up until that next level. Last, but certainly, as we always say, not the least, Japanese yen, Great British pound. So we had hit our demand area that we talked about in the Japanese yen yesterday, and it came back up to the breakout as the target, and now it's kind of come back down again. So now I'm going to remove both of these areas. And the reason I'm removing both of these areas is that both of them have been hit. But now what I have is a new setup. And what I'm looking at is this area right here. So now a breakdown below here. Now the problem with this breakdown is I don't quite have the room to roam that I like to look for, right? So just keep in mind, this looks very similar to the last breakout short that we had, where it was a fairly small breakout with a potential for another small reversal when price does come back into here. Looking at the Great British Pound. So the Great British Pound, we had talked about a breakout above this area. We got a little bit of a breakout, and then it just kind of didn't do a whole lot off of that area. Price action, once again, it is as I would say if I were 4 years old and didn't want to eat cauliflower, it's yucky. So it's a little bit of a yucky price action piece here. So I'm going to remove that one. There's really nothing in here else that I like at the moment, right? I mean, there's some levels that are significantly further away, like something down here. But I've got some time to go, I think, before we start to retest any of those levels. All right, so I know it was a fairly long video today, but I wanted to really kind of spend some time and explain some of these bigger picture levels. Tomorrow there will be no daily market commentary as we have our weekly live trading session. If you'd like to join our trading session, go to tradersarmy.com. We have it's for the month of January, $20.19 for your first month. What a better way to kick off 2019. So, all right, everybody, hope you have an awesome day, and